And we are live here at Chart Wizard Trading. Macro counts, stock market, crypto, throw some gold in there, look at some other stuff, maybe a couple stocks. Let's see what we get into. But I just put a video about the Dow Jones here the other day, which I go into a lot more detail on. Just check in here and let me look at the thing here. Yep, we got a couple people in here. It's all recorded though. Anyway, big detailed video the other day about the Dow Jones, but I'll hit it real quick here. So you have to put everything together, right? If you believe that there's a correlation, okay, long term, I'm not talking about like by the minute, I'm talking about month to month correlation between the stock market and say Bitcoin, right? Then it would behoove you then to pay attention to the patterns that the stock market is putting in, right? And this is one of the most important because it's a terminal pattern. Well, there's certainly long-term options, but as far as short-term options go, this is a terminal pattern. It's an ending diagonal, which will be completely retraced. Okay, at a minimum, that's a minimum expectation, is that similar to a triangle, which is not a triangle, it's an ending diagonal, that the entire pattern is prone to complete and total retracement. All right, that's at a minimum. But you also have a satisfactory 5 count. You won't know until hindsight if this entire wave is prone to complete retracement. So you have to take a calculated risk in the meantime and then observe what the reaction is from the top. But at a minimum, you can say with complete confidence that at least this wave will be completely retraced. Because yes, I have a 5 count here because it meets all the rules and it meets all the guidelines. Being alternation here, you have a flat and a zigzag between 2 and 4, but also right, this could be an extension, right? So you get a 3-wave retracement, which this entire thing will be retraced, right? You get 3-wave retracement, and then that's just 1, 2, and you're getting an extension. The only time you know you're not getting an extension is and then there's 2 of them. Okay, and we don't have any in this. There's no extensions in this. Now, you don't have to have an extension. Okay, so what the book tells us is that most waves contain 1 extension. Okay, of the rest of most, they contain no extension. And every so often, you'll get 2 extensions. Okay, but you can never have 3. But this particular wave in question here has no extensions, but it's also a terminal wave. Okay, as was a terminal wave with no extensions. Well, you can argue that the first wave is extended here because you do have some higher degree or higher amplitude retracements in that first wave. So you could say that this first wave was extended and then you just got a normal 3, 4, 5, right? Which also had a terminal pattern, or that was a diagonal. And again, at a minimum, this pattern, like back in the day, if you didn't know all this was going to happen, it's the same concept here. You have a terminal pattern here, an ending diagonal, that at a minimum, the whole thing would be retraced. Okay, and it was. And then you observe the pattern and see where you're at. Okay, it's a very tricky pattern on the way down because every diagonal, okay, can also be satisfactorily counted as a double zigzag. All right. But you know that you cannot get a double zigzag as part of an impulse, right? So if you have like a fifth wave here, right, you can't have a double zigzag fifth wave. It's not a legal pattern, right? Just same thing here. You cannot have a double zigzag fifth wave. It's not legal. So we can say with complete confidence that this will all be retraced at a minimum. Eventually, this will all end. It could be now, right? That if we go to the weekly time frame, eventually this impulse will end, this white one here. 1, 2, 3, 4, 5. Okay. It could be now. Right? The only way you know for 100% is when it's too late. Like we're talking about a difference between analysis and making an investment decision based on the analysis, right? So as far as the analysis portion goes, you can't actually confirm that until this low breaks. If that low breaks, right, then you know that this impulse is over. Why? Because it broke a wave 2 rule, right? You can't extend anymore. You have one extension, which is here in the third wave. Okay, and you have a first wave and a fifth wave, right? That appear to be roughly about the same size, which is a guideline. Right, that is a guideline for impulse development, right? And that's just what it appears to be like. We could take some official measurements here. Same size being, it could be same size many different ways. So one of those is you can just take a regular old stinking linear measurement. Okay, and this, I believe, what chart is this in? This is in log. Okay. So in linear, in linear, it does not, it's way too short. But linear is not the right scale to be measuring this, right? Because it's too big. So that's why I'm sitting here in log. And if you look at it in log, okay, it could still have some room to run there, but that's only one way you can measure it. Okay, you can measure equality in percentage. So if we take a look at here, boom, got about 73% rise there. And this should be much more than that. I'm sorry, less than that. About a 48% rise there. Okay, so not really equal in measurement. And then you have time. So you could take a time measurement. There's that one. And then 1-to-1 would have been here. So we're double the time essentially already. Boom. Almost double the time. But looks like 161.8% of the time, something like that. Okay. But by the looks of it, okay, and it's possible too that this degree is wrong, right? It could be that because when you have overlapping waves, then it opens the door for more interpretation. So if you move this over, say, okay, well, this was a much bigger one than we originally thought, right? Now that changes our viewpoint here because we're already short of the mark. But from a time perspective, if we say, okay, maybe we were off by a degree, this was a fifth wave and not a first wave, right? Then we can go back and measure time and find that we're pretty dang close to 1-to-1 in time, if that is the correct interpretation. When you get down to the nitty gritty here, it's pretty hard to tell, right? Actually, I put that on the wrong spot. Let me go back here. Measure that one more time. Because that was from the wrong part. So if that one's there, it's actually, I did put it in the right spot. Never mind. I thought I was on this pivot. Okay, so yeah, I was on the right spot. Yeah, so we're pretty much 1-to-1 in time if that's your pivot, right? In the end, it, kind of doesn't really matter. I had this one here. That could be wrong, right? That's okay. Whether you put it here or wherever you put one pivot over, just means you adjust how you count one of these overlapping waves. Say you have a flat instead of what you thought was a zigzag, right? It's the only difference it's going to be in the end. You're going to wind up in the same spot. Okay. But going by the right look, right? If I highlight this wave, let's make this bigger, right? It's a big highlight. You have 5 waves on the macro scale, right? So we're getting hung up at the top here saying, oh, this is going to go to the moon. No, it's not going to go to the moon. Okay. You're in a terminal wave, but it just happens to be a very big one. Okay. So whether or not you are within a year of finding this top or within a few weeks of finding this top, right? Doesn't particularly matter whenever you're looking at a wave that is 15 years old, right? So you're just talking about squeaking out the very end of something. Regardless, we have a terminal pattern here in the Dow Jones, right? Which, if you look even bigger, then you look at the yellow count, okay? We'll do the same thing. Well, you then have 5 waves, okay? And then this is open to interpretation as well. Okay, I have a triangle here, but it could be a series of 1, 2, and 1, 2, and then you count the overlapping waves in this sequence differently, right? In the end, it doesn't particularly matter in hindsight. With foresight, you would want to know, but this is in hindsight already, so you have multiple ways to interpret that. Whether that was a triangle or whether the entire 4th wave was simply one big zigzag, doesn't particularly matter 100 years later. What does matter is that you have the degrees correct. Okay. Now, here, this is to prove my point, all right? An alternate way to label this and wind up in the same spot. You can say, okay, this was a leading diagonal first wave. Okay, and then this was because what did I say? Every diagonal could be counted also as a double zigzag, right? Well, what are you allowed to have within a triangle? A double zigzag can be one of the complex waves. So then you have a leading diagonal 1 and a zigzag 2. Your 4 would go here. Let me go to the monthly time frame. How about that? So we can get it fitted all on one page here. That becomes your 3. That becomes your 4 as a triangle. Okay. As an expanding triangle here. And then you have an extended 5th wave instead. I'll highlight it. 1, 2, 3, 4, 5. So instead of an extended 3rd wave, you have an extended 5th wave. Which you could, before somebody says, oh, what if it's 1, 2, 1, 2, right? 1, 2, 1, 2. And then this is the extended 3rd wave. First of all, you still need a major retracement. Okay, for your 4th wave, which goes to where? The previous 4th wave. Okay. Also, if it can't be true because a 2nd wave is not allowed to be a triangle, right? So if that's an expanding triangle, then it can't be a 2nd wave. All right, but regardless, whether this is an extended 5th wave or if you can somehow make this a 2, right? Even though it's a triangle, it would have to not be a triangle, right? Doesn't particularly matter, because if this is extended 5th wave, so this is all a 3, right? This is all a 3. I'm sorry, the white one here. This is all a 3, because this yellow one was a 4. So then here's the 5 for it, right? This was all a 5th wave of a 3rd wave from 1929. Then you're expecting a 4th wave. And what's the guideline for the 4th wave? To go to the 4th wave of previous degree, which is here. Okay. Now let's say, oh no, that's all wrong. Where the 3rd wave, this white one is not done yet, right? And we're going to say, despite this being a triangle, we'll count it something different, some kind of like double combination or something instead to appease the masses. And we're going to say 1, 2. So 1, 2, 1, 2, and this is your extended 3rd wave instead. So then you have a 3. Well, what are you looking for? A 4. Well, where does it go? Previous fourth wave degree. Okay. So then you get a fourth wave, and then you come up here in a 5, and then call that your third wave. Who cares? What has to happen now is the same thing. And then you worry about the degree later. The two things, okay, are the same. It has to be retraced, okay? And it all comes down to this being a fifth wave is a terminal wave, is the end of something. Therefore, it needs to be retraced completely. And the only way to retrace it completely is to come down here back to 2009. Okay. Let's call it another 1-2 instead of a 3-4. What needs to happen? The same thing. You still have to do that. Okay. So, all right, look at the previous corrections on this scale. Okay. Where did this correction come down to? Previous fourth wave. Well, where did this correction come down to? Previous fourth wave. Right? Where did this 2008 crash come down to? Previous fourth wave. Where's this one going to come down to? Right? Where's this whole thing going to come down to? Previous fourth wave. This isn't rocket science, guys. This is the stuff that happens over and over again, but people get so caught up in these tops and the euphoria that it's just going to keep going when it's simply not. 5 waves is 5 waves all day, every day, and twice on Sunday. I know if you guys are typing in the chat, don't worry, I'll get to those here in a little bit. So let's go ahead and pull up the S&P 500. Oops, wrong thing here. S&P 500. Dun, 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 dun. All right, so here we are in a daily chart. 1, 2, 1, 2, 3, 4, 3, 4, 5. Done. And here's my stack of 5s here. 5 of 5 of 5 of 5 of 5. And we find ourselves in the same exact spot. We go to the weekly chart. Boom. Erase some of that noise. Okay. We got the same thing going on here. 1, 2, 1, 2, 3, 4, 3, 4, 5. 9 waves every time. And then it looks huge on this time frame, and then that needs retraced. You need a 3-wave move to come back to here. Yeah, it is a gigantic drop. Okay. But those things happen. That from the top here, I'm not getting to the penny, but to where it needs to go is 88%. Okay. That's a long way. I mean, say it can't happen, and that was almost 60%, right? But this is a bigger degree than what this is. Last time we had a degree that anything remotely close to this big, we have to go all the way back to 1929 because that's when the whole thing started. We had a correction and then an impulse, and then the next impulse needs corrected. Okay. So the last time we had a degree that was this big, where did we go? 86%. Okay. And this degree is actually 1 degree higher than what 1929 was. So I'm saying at least 88%. Well, it's only 2% difference than what 1929 was. You say, oh, that can never happen. Yes, it can. It did. It's happened many, many times. Many, many times. I mean, just this 2 here, which is of a smaller degree, was 60% drop. Multiple of those along the way. So yes, it can. Okay, and you can do the same. You can do the same thing here. If that's not a triangle, you can do the same thing. 1, 2, and then you're getting the same pattern. Put your 3 there. There's your expanding triangle, and then you count it from there. 1, 2, 1, 2, 3, 4, 5. Fifth wave is done. Right, for the S&P 500. Come back down to the daily time frame, and why this is important. Okay, because there's going to be a lot of Bitcoin lovers out there. Because ask yourself, do you think if this is what the stock market is telling us, then do you think that Bitcoin's not going to follow? Right? Or do you think it's going to decouple? If you think it's going to decouple, then okay, go ahead, run with that theory, and let's see how far you get. Don't worry if you have questions. I'll circle back. Okay. Now let's look at the NASDAQ. Now this is the NASDAQ composite, which is bigger than the NASDAQ 100. Okay, but this is essentially the same pattern. All right, so you have the leading diagonal first wave. So 1, 2, 1, 2, 3, 4, 3, 4, and 5. You have 9 waves with an extended third wave. Most impulses have one extension. The rest have no extension, and very few have 2 extensions. Okay, you have 1 extension here in the third wave. That is what the vast majority of impulses contain, is 1 extension. Well, there you go. You got it. So why would I go back to the Dow Jones? Okay, if we come back down to the, whoops, wrong button. Come back down to, say, the weekly chart. Jumping back to the Dow Jones. I made that point earlier that this one has no extensions in it. This final wave, the final since 2022, right? For the last 2 years, we've printed an impulse wave with no extensions in it. Well, why would I say that it's now done if most impulses contain at least 1 extension? Well, because the S&P 500 printed an extension, and the NASDAQ printed an extension. So if this is now done and going to be completely retraced, then the Dow Jones is going to give us an extension and completely diverge from the rest of the market? Highly unlikely. Right? We're talking about probability here. So what's more probable? The Dow Jones printed a 5-wave impulse with a terminal ending pattern that doesn't contain an extension, and the other ones did contain an extension, right? Or the Dow Jones is going to keep going by itself against everything else retracing by huge percentages. It's not going to happen, okay? You have to be realistic. Okay, it's a big logic puzzle. We're playing, when we count this stuff out, we're playing chess with the market. Okay, and when you get to points like this, with the Dow Jones and a terminal ending pattern, you say, nice, checkmate. So let's check out the Russell. Now, the Russell is pretty important to this analysis as well. Come on, buddies. There we go. Let's see here. Is this the main count? So this was an alternate count that it's not looking super probable at the moment. Where'd my other one go? Okay, this was the main one to be in line with the rest of these 3, the Dow and the S&P. Okay, so we had this triangle, the 4th wave. So, and post triangle thrust to complete, which always gets fully retraced, and it already has, right? Here's the thrust, and it's already fully retraced. That was retraced in an impulsive first wave, and then you got a 3-wave correction. Just can't break this high, and it didn't, and then you're starting to way back down, right? So this is going to be, or is a 1 and a 2, and then you're small degree 1, 2s here, and then it's going to start accelerating into the 3. Right? But this Russell already printed a 1, 2. This is what makes it different. The Russell has already diverged from the techie stocks. Okay, this is not the techie industry. These impulses were fueled by tech, which is what made this analysis incredibly confusing, because you watch essentially the bellwether of the market, being the Russell 2000, of the market as a whole, saying that 2021 was the high, but then the rest of the market didn't agree. But the Russell still agrees, because you got an impulse down, and then you have a flat. Right? This is just a flat, expanded flat. Okay, A, B, C, flat pattern for a 2, right? Because 5 has to begin something or end something, right? And in this case, ending a flat. So you have a 1 and a 2, and this now it's going to start its 3, right? Where the rest of the market still has to give us the 1. Okay. Now, as far as the NASDAQ goes, we already got the 1. We got 1, 3-wave retracement 2. And that's telling us that the tech mania has subsided, right? S&P 500 hasn't given us that yet. It hasn't started its 1 down, and neither has the Dow. Right? But the NASDAQ has. The Russell started its first wave down a while ago. Whoops, wrong one. A while ago. Right? So this has to be watched really closely, because if this high breaks here, then this analysis is completely wrong. Okay, and we have to reevaluate. Now let's go to what everybody's been waiting for, Bitcoins. Okay. Bitcoin. This is in a linear chart, I believe. No, it's in log. Okay. So in log here, we have a completed impulse from, let me go back to the weekly. Let's go real. Actually, let's go monthly. Okay. Some of my labels are missing. Why are my labels missing? Are they on here? Yeah, there they go. So we have from the beginning of Bitcoin. Okay. Now you got to put into perspective as well. When did Bitcoin start? Right? The same time the impulse started for the stock market, for all the stock indexes. Right? Back in 2009. Let's go back to the weekly. Right? So after the 2008 crash, okay, which was a flat, okay, you see 5 waves down, 5 waves begin something or end something, right? You get a zigzag here, 5 waves down with an extension in a third. Every impulse, or most impulses, contain at least one extension, and you got one here. Now 5 waves begin something or end something. In this case, it ended it. It ended a flat. But when did Bitcoin begin? Right around here. And it's been following this impulse all the way up. So if this impulse is complete, then why wouldn't this impulse be complete? We do have a satisfactory count after all. 1, 2, initial 1, 2, okay? And then an extended third wave, 1, 2, an extension within the extension. So 1, 2, 1, 2, 3, 4, 3, 4, 5. So you see Bitcoin starting its life with 3 1 2s of varying degrees, right? So 1, 2, 1, 2, 1, 2. And then it gives us 3, 4, 3, 4, 3, 4. Okay, so now we're matching that, and we just need a 5. And we got an extended fifth. 1, 2, 3, 4, 5. Now, what did I say earlier about extensions? You can have up to 2, right? And no more. So if you have two extensions now, so you have an extension here in the third, you have an extension here in the fifth, you cannot get three extensions. It's illegal. You already have both extensions. Now, is it possible, okay, that if you zoom out here, that this just isn't complete yet, right? Meaning this isn't the third wave, this is a subwave of this, and then you have 1, 2, 3, 4, and we still have yet to see the fifth wave of the final fifth, right? Certainly that's possible, right? But anybody calling for like freaking $300,000 or whatever, no, that's not gonna happen. Okay? This is a terminal wave that is either complete or very nearly complete. And if it's very nearly complete, you're going to get 1, 2, 1, 2, 3, 4, 3, 4, 5, something like that. And that'll be it. If it's not complete already. Either way, where do you go? Previous fourth wave. Whether it's from now or from up here. Okay, here's the issue though. Here's the problem with expecting one more up. Is that generally when you get a fifth wave, okay, it's so you can get a new all-time high. Right? The third wave in that scenario already made the new all-time high. So the market doesn't have any motivation. There's no goal to meet. Which is why this count comes forefront with the first wave extension. We have a satisfactory count here with a first wave extension. You see 1, 2, 3, 4, 5, first wave. So if you count them out and then you go 2, 3, 4, 5, first wave extension. There's a lot of evidence pointing to that this is a first wave extension. Okay. How many waves is that? 1, 2, 3, 4, 5, 6, 7, 8, 9. It's all done. Okay. You have 9 waves. You have your extension already. So if that's the case, if you want to say, okay, no, I have one more push, right? So you move that 3 there, and then you move this 4 here, right? So then you would say you have an extended first wave because you have amplitude waves that are, big. And then this somehow you got some teeny, itty bitty, teeny tiny 2, right? 1, 2. Okay, even if you wanted to call this one, technically, I don't think it subdivides that way. On the index chart, this low doesn't break, okay? But on a lot of others it does. So that's why I don't give it a lot of priority here. But we can, for the sake of argument, since we're on the index chart, say that, okay, this was another 1, 2 instead of all being the 2, right? So then you got 1, 2, 3, 4, 5. Well, now what do we have? 2 extensions, right? Extended first, extended third, which means the fifth wave cannot extend. Which means this would have already had to be complete. It would already have to have pushed from here straight up, barely made an all-time high, and then be done. Because you can't have 3 extensions. It's not legal. But what's already developed is an amplitude wave the same size as all of the rest of these, right? It's already developed. Well, you can't have 3 extensions. You can't have 3 extended waves. It's not legal. It's against the rules. So using what the market has given us, this cannot be an accurate count by putting this 2 here, right? And I already knew that a long time ago because on many charts this low broke and you can't break the low there. Okay. So that's why the primary count here is that the first wave is extended, and then you have 3, 4, 5 to end it. And it's done. And then you have 1, 2. All right, let me come down to a smaller time frame so you can see the 1, 2. Okay, leading diagonal 1. Leading diagonal 1, 5 waves. Okay. 1, 2, 3, 4, 5. Leading diagonal, a flat 2. So you got 3, whatever that 3 wants to be. You can call it zigzag, double zigzag, triple zigzag. Don't really care. It's an A wave. Okay. Just has to be 3 waves. A zigzag for B, and an impulse 1, 2, 3, 4, 5 for the C wave, and a regular flat. Okay. It's not a running flat. Okay, I've seen some people out there on YouTube calling it a running flat. It's not a running flat. Why? Because A and C are the same size. If you measure A with respect to C, let me go to the 100% extension. Okay, C is actually longer than A by a touch, but they're roughly about the same size. Okay, and if you exclude the wicks, okay, it's pretty close to the same size, but you know, price action is price action, so that's where the wick went to. C is actually longer than A. Running flat is C is significantly shorter than A. In this case, C is longer than A, so it's not a running flat. It doesn't matter, that's semantics. A flat's a flat. But you have leading diagonal 1, flat 2, and then 1 and 2. And now you're starting your third wave. You'll get a 1 and a 2, and then things will really start to accelerate. Let's even examine this part right here. Okay, you have a 3-wave move. Okay, we're on the daily time frame here, and we got some really nice Fibonacci ratios here. So starting here to the top, you have 20 days, probably 20 in several hours. But as far as when the candle closed, okay, 20 days, which is within hours of the Fibonacci number of 21. All right. And then the C wave is 21, exactly 21 days, probably 21 in a few hours, okay, but we're within a day here, 21 days for the C wave, so that's equality. Okay, you have equal time between A and C, and if you don't know what I mean by A and C, I mean A, B, C, okay, and then not only that, but the B wave is a nice Fibonacci, or within several hours of a very nice Fibonacci number of 13. The daily candle counts it as 12, okay, but you're within hours of 13, well within the margin of error there. So 21, 13, 21, 3 Fibonacci numbers to make a equal in time zigzag between A and C. Okay, and now you have an impulse down already. Okay, expecting a 3-wave retracement. All right, so probably to somewhere around the 64 to 64.5 area. Okay, over the next day or so, before we really roll over and start moving. And how do I know it's 63 or 64.5? Because of the smaller time frame that I already looked at. Okay. If you're going to count this here as an impulse, you have 5 waves. So you got 1, 2, 3, 4, 5. Okay. And let's make that smaller so it's not freaking gigantic. There we go. You have a 5-wave move down. Okay, and where do waves typically retrace to? Like I said, near the terminus of the previous 4th wave. Right, so you're expecting some sort of zigzag here to come to right about there, which is around $64,000. Okay, which is probably pretty close, probably between the 50 and the 61.8 retracement. Not that that means too much, but there's a 61.8. Oh, look at that! It's right freaking exactly at it. So there you go. So, you know, that's what you're waiting for there, and that should be 1 and 2. 1, 2, and let's get moving. Okay. So that'll take several days for that to cover, because the market takes most of its time correcting. All right, so that doesn't mean this has to shoot up to 64 right now. This could be, you don't know if it's a zigzag, double zigzag, right? But let's say you get a zigzag here, it's not far enough, and then you get a correction, say over the weekend or whatever, ranging out, and then you get the other half of the zigzag. Right? It could take many forms, okay? But it doesn't particularly matter because you're just simply waiting to reach this range right here. So let me now go and look at some questions we have, and then I'll go back to it. So first one says, do you feel, this is from CXX8851, do you feel the S&P 500 is making a B wave high? No, I don't. Since the fourth wave needs more time and a larger degree of correction. It does not. So if there's no time rules in Elliott wave, so it doesn't need more time. Let's see here. If the market crashes hard enough, the aliens that made Bitcoin will come back to fix the world. Okay, that's one way to look at it. That's all the questions I have right now on here. But yeah, to answer your question there, CXX8851, no, it's not a B wave, and 2, the fourth wave does not need more time. Okay, so that's Bitcoins. So let's now move on to a little bit of gold action. Let's see here. Was this my main gold chart? Yeah. All right. So this is me on a weekly view. We're in a third wave. Right now I had this 1, 2, 3, 4. This is either an extended fifth, right? And you see I have these labels kind of laid out, or it's 1, 2, 1, 2. Right? Doesn't really matter in the end right now until we get up there and then we see what looks better. But we already had here a 1, 2. Okay, and this is however you want to subdivide it, 1, 2, 1, 2, or just like I showed with Bitcoin, 1, 2, 3, 4, and then extended fifth wave. Okay, that wasn't what I showed with Bitcoin, but you can get an extended fifth. Any one of these waves can extend, right? It could be the first wave, the third wave, the fifth wave, or the third and the fifth, or the first and the third, right? Not sure I've ever seen that before. Maybe I have. First and a third extension. I've never seen a first and a fifth extension. But it needs to keep cranking out, right? One of the question marks was down here on this level. I'm not sure if this at the bottom here, I'd have to go to a smaller time frame for you to see it. There. I'm not sure if this is 1, 2, 1, 2, or if this is all 1, 2, right? This is just like a flat right there. All right, that's where it's up to interpretation. We'll find out later, right? So right now I'm very much long on gold, and now waiting for this orange 4 to be put in. Okay, which could be this this white 4. Not sure yet. It doesn't particularly matter because I know I got more time to figure it out. Okay, now if you get something in the meantime that's like a triangle or something, then you got to question yourself. Then you're going to be like, oh, okay. Let's really go back. And measurements too, right? If you measure this and it's getting pretty long in the tooth, then you can go back and adjust your count. But the reason I have this as a 4, now that I've zoomed in, is because I have this as a triangle. Okay, so post triangle, you get one of two things. Okay, and this is the reason why I have it labeled this way. You get either a quick, fast thrust, which is what happens most of the time, in which case this would have had been over with already. But the problem with it was that we were pretty equal on that, right? So the length of this and the length of this were pretty close to the same, right? So if this is going to be your fifth wave, if you're going to say at the time that that was your fifth wave, right, that those were pretty equal, right? The blue 1 and the blue 5. And that in most impulses, you're like, yeah, that's what you want, is equality between 1 and 5. The exception to that is when you have a triangle. When you have a triangle, you should not have equality between 1 and 5. You should have very much inequality between 1 and 5. So what this should have been was super stinking short. Okay? Maybe not even beating this B wave. Just barely busting a new high or even truncating to be a post fifth wave thrust. Right? And we didn't get that. We got equality between this one and this one, which should immediately tell you that those two waves are not related because it's post triangle. It should tell you that, oh boy, here we go, we're getting in an extension. Equality between those two waves post triangle tells me that's wave 1 of 5. And then you got a long way to go. Because the other thing that happens post triangle is if it's not super short and thrusty, that does not meet a guideline, that's not equal, then it's extremely long and extended. Those are your two options following a post triangle, is extremely long, extended, or really short and stubby. Well, we can safely say at this point, now that we have the benefit of the hindsight behind us, is that we're getting the extremely long and extended version of a fifth wave for gold. Oh, that's my, hold on, let me put this on pause. That's my storm alarm going off. Okay, back. I don't have a storm. That was just a weekly test. I just have a weather radio in the house here in my office. So yeah, and then that ends up for gold being, so this would be this blue 5, and then that's the third wave, and then you need a bigger fourth wave, right? So this is the long-term outlook for gold, which is why I've been long on gold for a very long time now, for at least a year. And then you need a fourth wave, which where does it go? Previous fourth wave degree, right? So you'll get an extended period of time. This might take a year, right, just to get this fourth wave, and then you'll get your final thrust. Okay, to end this one, which is the end of that third wave, and then you still need this fourth wave and this fifth wave before you get this fifth wave. So this is many years into the future now, at least like 3 years into the future to top gold out. And these labels don't say it's only going to 3,000. These are just labels sitting in space. Like there's nothing stopping this from having extensions within extensions and really taking off. Okay. But for the meantime, no reason at all to not be holding gold. No reason at all. We're in the middle of the third wave. Like, we're in the middle of it. We're years from ending this gold bull run. Years from it. So let's see what questions I got here. If the S&P turns out to be a B wave high, what is your range for ending? The S&P is not going to be a B wave high. To answer your question there, CSX 8851. There was a point in time where I thought that was a potential scenario, but that ship sailed about a year ago. It's not a B wave high. Alternate count for the S&P. That the final wave's just not done yet. There's not much more to go. you already have 9 waves. So I mean, you can extend this just a little bit more, right? You can say that that this instead of a 5 is a 1, right? And then you're going to retrace and then get 3, 4, 5 like that. Certainly that's on the table, right? But it's not a B wave. So because first of all, B waves have to be 3 waves. Okay. And this is not 3 waves, this is 5 waves. So your B wave can't be 5 waves. Legally can't happen. So because there's not much more. It can't continue to go much more because you already have, you can get a 5th wave extension, right? That's about it, because you don't have an extension in the first. Okay, so you have a 3rd wave extension here. This could be 1, right? 2, 3, 4, 5, like that. And then all these labels just move up here, right? And then you have 2 extensions, right? So you have your initial 1, 2, 1, 2, 3. Oh, this is 3, 4, 5. So this is 1, 2, 3, 4, 3, 4, and then this can extend all to be 5. Right? So 2 extensions, you'd get 13 waves. Right now you have 9. So if I said 1, 2, 3, 4, 5, right? So then you should get 13. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Like that. So it's a possibility on the table. The thing that draws you away from that, however, as explained at the beginning of the video, is the Dow Jones. That's a terminal pattern. So not sure how we get around. You can't really rectify that. Right, and then you'd be the believer that the Dow Jones is going to dump and the S&P is going to continue on, right? And that's not really the spirit of it all, right? You have 1, 2, 3. You can get, I guess, you can get an extended 5th wave, like if you say, okay, this diagonal was a 1, right? And then you can get a little pullback, 2, 3, 4, 5, and then you just have 1 extended 5th wave. Right. Problem being is that I've never seen personally an expanding diagonal in the wave 1 position of an uptrend. I don't think I've ever seen that before. I don't think it's precluded in the book. I don't think they outlaw that or anything. It's not something that can't be done. But I don't think I've ever seen it before. And if we're talking about probability, then I'm not going to put my coins in that piggy bank. You say someone effectively can predict the future, so how would they be able to tell if they were going to get back up to 64 or 63 by ABC or a 5-way diagonal with all we see as now from the bottom? I'm not exactly sure what you're asking. Someone effectively can predict the future. Okay, end sentence. How would they be able to tell if we're going to get back up to 64 by ABC or a 5-wave diagonal? You don't know, is the answer to the question. And it doesn't matter because you don't have, you're talking about getting entries, right? And that's reserved for the membership. So I'm not going to put that out live on YouTube on how you profit off of the analysis. YouTube here is just analysis. If you want to know how to then profit off of the analysis, then that's going to require the membership. So wavecounts.com is where you can sign up, and once you are a member, I know that, but we can talk about it in the Discord or whatever, and go, we can do a live stream in there and break it down, and I can answer your question there. But as far as here on YouTube goes, then that I'm not going to answer that question on YouTube, but I'll answer it in the Discord. All right, so I'm seeing, CXX says, can the high in July 2023 be A of B? The low in October, B of B. High in July 2023, A of B. July 2023. No. Because an A wave has to be 5 waves. If you're talking about as being part of a double zigzag, I think, I assume is what you're saying. No, that's not an impulse. It's 2 impulses. Okay, but you can't, so you can go ABC, okay, and you can say that's a W, X, and then you can go, oh, you can't anymore. You used to be able to go ABC, and then you say Y. It's done, right? And that could be a double zigzag for your supposed B wave. But one, it's way too far. Like a B wave should have ended here. If that was going to be a B, and that's when we were talking about it being a B wave. Like I said, it ended a year ago. Well, six months ago. How about that? All right. Once this broke and kept going, that told you that's not a 3-wave move. That's an impulse, and you just need to wait for the impulse to complete. And in the big scheme of things, it's in its terminal topping process, terminal stages there. But again, a B wave can't be an impulse, right? So if this is going to be zigzag, X, zigzag, then it had to be done, but it wasn't. It kept going, right? So it gave you, it didn't give you 3-3. It gave you 5 waves, right? 1, 2, 1, 2, 3, 4, 3, 4, 5. 9. You have 9 waves total. So, no, it's not a B wave. It can't be. The B wave is over in March. It's 6 months ago. It's much, 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 much too big now to be a B wave. But it could be a 5th wave. That's the good news. Like it's always something, right? So it could be a 5th wave. Absolutely. The other thing with corrections, right? Corrections are typically channeled. Okay, so if this was going to be a correction, then you would go like this. All right, so this would be, if you're going to say that's your A wave and your B wave, or your W and your X, right? Then the top of that should stay within this channel, right? So what this channel is telling you is that it's not corrective behavior, it's motive behavior, which impulses need multiple channels to be able to contain, right? So you would have your 2-4 channel, okay? So that is now the impulsive channel, okay? And then this impulse should be contained within this channel, and it is, because you got the yellow 2 to the yellow 4, and you drag it up to the yellow 3, and your 5th wave should be contained within that channel, and it is. So you have the channel telling you it's an impulse, and you have the what you would believe to be a corrective channel, right? So you go from the bottom to the B/X wave to the top of the A/W wave, and it's telling you no, it's not contained. It's completely ignoring that channel. That's price action telling you, I'm not doing what you think I'm doing because I'm not what you think I am. That's what channels are for. That's what channels. Channels aren't entries or exits, and because it touched something, then therefore you should short it or long it. It just gives you information. So the information it's giving you, if you say WXY, is that, hey buddy, I'm not what you think I am. And you shouldn't ignore that, right? And then if you go the other way, you say, well, if it's not that, then what is it? You say, well, if it's an impulse, then this should be channeled very nicely, and it is, right? You can get an overthrow in a channel too, just like you got an underthrow here, and then you come back to the channel. You can get an overthrow here. It's not a requirement. You don't have to. But like say you came up here, you got an overthrow, come back to the channel. That's perfectly acceptable, right? And then you move down. Okay, but what's not acceptable is, so one underthrow or one overthrow is acceptable, but what's not acceptable is constant and consistent in and out like this, right? Right. If you got to this point, you're like, okay, we got an overthrow for the correction, and that's okay. We're returning to the channel, and you're like, boom, yeah, look at that. We have ABC, right? And then we can say, yeah, B wave, right? Or WXY, right? 3-wave move, zigzag family. You say, yeah, sure, that's a B wave, and that's an A wave, and then we're expecting 5 down and a C, right? And then once you break back out of that and break this high, it's done. It's over. All done, never to be talked about again. Like I said, that's been over for the B wave idea over for a very, very long time, and the market told us that way back here. Hopefully that answers your question. You're seeing charts come out saying we're bouncing, but saying we are going up as a diagonal, not traditional mode of wave up. Yeah, we'll talk about it in the membership. Natural gas. I haven't looked at natural gas in a really long time. I have a chart for it. I don't think I've touched it in a hot minute. But we can adjust some old labels here and see where we're at. Okay. So let's get rid of that because that would have been wrong. So we got, looks like we had a double zigzag. Yeah, that looks pretty clean actually. Let's get rid of this. All right, so you have a zigzag down, right? For natural gas. Zigzag down, 3-wave correction, zigzag down, right? That's a double zigzag, okay? That would be W, X, and Y, okay? And now it looks like we're impulsing back up. So you got 1, 2, 3, 4, 5, okay? Clear impulse right there. You have your zigzag retracement, and then you're in the 3 of the next thing. So you don't know. Is this going to be a zigzag? Right? Is this a correction? Well, one thing you do know is it can't be, right? So natural gas should be certainly on its way up, because you can't start a correction with a double zigzag, so that being a double zigzag, right? The only way you can start a correction with a double zigzag is if it's an A wave. And if it's an A wave, it has to be a flat. So if this is going to be part of a correction, this has to be the A wave of a flat, if not the complete correction, right? But regardless, if it's going to be the A wave of a flat, why am I saying that? Because combination patterns, okay, can only be the complete correction. It cannot end a portion of a correction, okay? Combination pattern can only be an A wave of a flat. It could be a B wave too, but like if it's going to be a 3-wave move that is component of a correction, then it has to be the A wave. Okay, to begin it, I should say, because it can certainly be the B wave. B waves can be anything except for an impulse, right? Which you just talked about. But the good news is that since you have a double zigzag here, all right, regardless of whether or not this is just an A wave or it's a complete correction of some degree, maybe it's a 4, maybe it's 2, right? It's either 2 or 4, right? So you have 3 options here. It's an A or 2 or 4, right? All 3 of those things point way up here. Okay, why do I say that? Because obviously if it's a 2, then 3s have to beat the high, right? So if we're entering a 3 right now, we have to beat the high, right? If it's a 4, unless it's going to truncate, which isn't very likely, then odds are very great you're going to beat the high, right? If it's an A wave, then you have to get to a minimum of 90% if this is a bigger correction, right? So if you take a retracement on this down to the bottom, which is about there, and I pull up the 90% retracement. Where is it? There it is. Okay. You have to, since this is a double zigzag, no matter if it's an A or 2 or 4, you have to at least get here. Okay, so if you're going to go, how is this important? Well, if you want to trade it, it's important because once you have your entry, you know exactly where it needs to go at a minimum. It can go much higher than this, but at a minimum, it has to go there, which is $9.11 or whatever. If it's not, okay, if it's like if we're in a 3 or whatever, obviously that's going to be greatly exceeded, right? It's just going to keep going way up here, which probably not, okay, because things like natural gas tend to just move correctively over and over time. So it's probably going to be a flat, which, by the way, a flat can exceed that. You can, if this is going to be the B wave of a flat, you know, you can come up around here. We can't get excessive about it and come way up here, okay? But you can come and beat this high by a smidge and then come down in 5 waves for a flat. Right, but for the near term, right, as far as natural gas has been the lowest it's been on this chart, okay, which doesn't go back all that far. 2017 is where it started, okay? So we've beat the lows of 2020. When did the crash happen? Right? Yeah, right around there. So minimum expectation is there. Hopefully that makes sense for you. Okay. The Dow is fully contained in the channel. Yeah, I agree. The Dow is fully contained in the channel, which that's what impulses do. Right? If it's just 5 waves, right? So you go here to here, right? It depends where you have an extension to, okay? So you go here to here, and you've already come out of the channel. But it's not a surprise since it's a terminal pattern, okay? In that case, since you have very large amplitude waves here as compared to what's in the previous wave, then what you want to do is that. Go to this 4th wave. Okay. The other thing you can do with something that is non-standard, that you have a very big expanding diagonal to end something, is just to use a simple trend line. So if you go wave 1 through wave 3, right, you got a very slight overthrow here, and you're kind of dancing around that trend line, right, to come back down, but you have a terminal pattern reaching that trend line. So if this was ABC, okay, if you're going to say ABC, right, then you would draw your channel like this. Okay. And that's all contained, right, as a corrective channel. But just because in a corrective channel doesn't mean it's corrective. Now, you could certainly make the argument that the Dow is, but we go back to the beginning point here of you cannot make that argument for the S&P 500. You cannot make that argument for the NASDAQ. Okay, neither of which, you can't make the argument for either of those indexes. You can make a corrective argument for the Dow, right, other than it being really stinking huge for a B wave. I mean, what is it? That's like 200% or something. Where are we at? 1-to-1 is there. So we're at about 150%, something like that. This is what in log? Yeah, we're in log, in linear. is what we really want to know. Boom. So, approaching 161.8. It's pretty big for a B wave, but not completely unheard of, right? You can get some crazy looking B waves, but then what are you correcting, right? What are you correcting at this point? Because that size has to be relative too. You certainly aren't correcting this, right? Because if you're saying that that's a 1, right, which was the original idea behind the flat, right? And then you're going to say A, B, C. Yeah, good luck. Nope. And then if you take it bigger and you say, oh, I'm correcting all of this, right? And you say, okay, all of this needs corrected, so I'm going A, B, C. Now the A is too small. Okay, so it has to be relative to the whole thing. And that's why I said the ship sailed 6 months ago. Any other questions? Okay, hearing none, we'll end the stream, and that'll be all she wrote. Thanks for showing up today. Those are the long-term macro accounts right now for the stock market and a few other things. A little Bitcoin in there. We looked at some natural gas, some gold, and we'll see you in 3 or 4 months. See how all shook out. If you want to know about the smaller time frame stuff or learn how to do this yourself in the meantime, wavecounts.com. Okay, wavecounts.com. You can join a Chartwizard training membership for a whole year and keep going if you want. But minimum a year. I used to have monthly. I got rid of that because I only want people who want to be dedicated to learning the craft. That's why I did that. And if you just want to join for a month, that's not nearly enough time to even broach learning how to practice the LA wave theory, let alone profit off of it. So, year minimum now, and it's only for the hardcore folks who really want to learn. If you don't really want to learn, don't join. Okay, this is only for hardcore people. All right, until next time, we'll see you.